Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading with the nightly market update for Wednesday, April the 23rd, and the hits just keep coming. Today was a crazy day. We'll get into some of the reasoning why, but the ES at one point we were up 171 points, I think. Let me move this out of here real quick. So we closed there. Big gap up here on tariff news. Just kept going, and then just kind of gave it back and chopped into the close. Which I don't know how to read this market. I talk to a lot of professional traders all the time, and everybody's scratching their head. We're going to get follow through, or we're going to pull back. And I think most of the ones that I am talking to think we will go higher, at least a little bit higher, and then probably come back down, and that's what I'm seeing too. That's the short answer. But let's look. We'll stick on the ES here for just a minute, and let's go back. Let's go back 3 days here. Just some stats. I like looking at stats. So 51.27. This is Monday. So this is Sunday, overnight session, cash session Monday. So from here on Monday to Wednesday, that's 373 points, I believe. In the ES, I mean that's not the Nasdaq, that's the ES. That's crazy. It's really moving. We all know this. It's all over the place. Let's go back to a 20-day chart. So check this out. This is even more impressive. So 20 days, we've gone from 58.37 down to 48.32. That's a little over 1,000 points down in the ES, not the Nasdaq. And then back up here today, that's about 670 points back up. Crazy. This is that one right there in particular was one of the biggest days in history. I think it was the 8th largest for the ES. I think it was one of the biggest for the Dow ever. Anyway, crazy. Same thing with the Nasdaq and the other indexes. All over the place because of tariffs and what's going to happen there, and when is it going to happen, and all that kind of stuff. And unfortunately, it may take a little while to work all that stuff out, and so we're going to be subject to whiplashes, as we go. And that's just part of it. But the bigger picture, a little more concerning, is that we are clearly, we're clearly in a bearish market and a downtrend here. So it's going to be really hard to get back up here and go this way and keep going. We're likely going to hit some of these levels, up through here and come back down. And that, let me flip this over and just do a simple, there's simple moving average. There's a 200-day moving average. There's the 50. There's the 20. Now we did get through that kind of. See that candle right there? I kind of thought we might fail there. We might fail there, and resume this down. I don't know. It's really tough to know because there's so many external factors now that we're not used to dealing with. We've got, of course, all the tariff news. We've got inflation concerns, recession concerns. Everybody's talking about a recession. The thing about the recession conversation is that whether we're already in it or we're going into it, recessions are healthy for the economy. It's kind of, cleans out the system basically, because of all the stimulus money that has been pumped into the system since '08. Nonstop printing presses. We haven't had a recession because the Fed has not allowed the economy to have a recession. That's not good. I think we're probably postponing it, inevitably. But who knows? Again, this thing could turn. There are some tricks that that we can do to keep things going and all that kind of stuff. But don't don't think we're out of the woods yet, and also don't think that a recession is necessarily a bad thing. Now I know that people lose jobs and all that stuff, and it's not good. And I'm reflecting back to 2007, 2008. might we have something like that again? Yeah, we could. So just be aware. And I've said this in other videos for the last several months. This is nothing new. And the tariff, the tariff war, I guess is the best way to put it, is not. It's a problem. It's not the problem. The bigger problem is, recession, inflation, what's going on with the dollar. There's a lot of things out there that we need to be watching. So that's the bad news. The good news is, we can. I know it sounds all gloom and doom. It's not. We can still make money in a market like this. You have to be, of course, a lot more nimble and be careful. But I know a lot of people are making a lot of money in this because of the volatility. It's just been crazy. Let's go back out here to let's put this on a maximum weekly chart. Okay, so, and let me switch this over. This is pretty interesting. If I can get the SPX up here. So this is .com bubble, 50% drop in the S&P, this SPX. It took 7 years to get back to this level. There's 2008, 2007 housing crisis. It took 5 years to get back just to this point, right? And since then, we've been printing money. There's the 200-day average, 200-day moving average. That's COVID. We did go down through that. That was, big giant unknown, all that kind of stuff. Come back down to 200. There's the 200 right there. It would make sense that we keep coming down back to that 200. And this is just ballparking stuff. As we get, we can get a little more granular with voodoo lines, fib levels, stuff like that. But if we get down here, now this is not the time to short. This is the time to be a buyer, honestly. But selectively, you have to be careful and all that kind of good stuff. But again, it's not all gloom and doom. There are a lot of companies out there that are doing they're doing fine, and we have to focus on those. I think most people have gotten used to buying the Mag 7s, and that's right now is not working anymore. We're seeing earnings season, that is very kind of hit or miss, and most are probably miss. I saw some good ones today after the close. We had IBM and ServiceNow, and I think Lam Research, and a couple of others looked pretty good initially. But again, it's right now is not the time to be buying this dip. It's time to be looking for honey badgers and being very, very careful. Let me show you what's coming up on the horizon here. So we've got PCE, I believe, is on the 30th. And we've got payrolls on May the 2nd. Then we got a Fed meeting right here on May the 7th. And of course, a lot of earnings. We've got Apple, we got Microsoft. Amazon is May the 6th. I think Apple's May the 1st. Nvidia is coming up toward the end of May. And we got Microsoft next week. But let me show you this. So Fed meeting here. You've heard a lot of rhetoric about Trump wants to fire Powell, and now he doesn't want to fire him and all that kind of stuff. I don't think that's going to happen. But let me show you what is expected here. And this is again not a rate cut would be good. I understand why Trump is saying that. A rate cut would be good. It would kind of save the market, basically. The problem is you can't just do one because of the other. There has to be, all the data points and all that kind of stuff to make sense. And there's only so many bullets there. The Fed can only cut rates so many times. Now, I do think, and I've been saying this for a little while, also that we're going to get more rate cuts this year than anyone expects. We were looking at one. Start of the year, we're looking at maybe one more rate cut. Now I think we're looking at 3, and I think we might even get more than that. But look at this. The Fed meeting I just showed you on 7 May, there's a 94% chance of no rate cut. That's not good. It's not good for the market. So short term, I would be fading this stuff back down, most likely. This can change in, as we saw just the last 3 days, up, hundreds and hundreds of points in a day. So it can change with some news. Agreements have been reached with China and the EU and all that kind of stuff, and we're off to the races. But I still think that might be kind of short-lived. So just be careful out there and try to play both sides. That's what we've been doing. We've been going long and short, and it's working. It's a little more effort, but it's working. If we go out here to the June meeting, now we're looking at, this is your first rate cut, 55% chance there. And July, we got 45% chance of 25 basis points, which at that point, this is July, we would have already gotten 25 basis points, and there's a 40% chance that you get another rate cut. So June, July is when we're going to get rate cuts, I think. And that'll help the market. So again, that's what I'm looking at here. I wish I had, something else a little more definitive, but in this market, it's just really, really, really hard to, just really, really hard to know because of the news that can come out and all that kind of stuff. But we're in clearly a bearish market right now. So just be very, very careful out there. Tight stops. I put a trade on yesterday, took it back off today. Just manage your risk. Scalp profits when you can. I had one on Monday. We put it on, I think Monday, and we took it off yesterday. No, put it on Friday and took it off Monday. For a little profit. But again, that's just kind of the way you got to trade this market. So with that being said, if you need help, have questions, come see us at Simpler Trading. Come see me. I'm in the main room a couple times a week. I'm in the bias room every day. So glad to help any way we can. And again, be careful. Use tight stops. Scalp profit when you can. And we'll see what we get. So thanks for the time, and I'll talk to you guys soon. Take care.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me